Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, Yatin, after a wobbly start, we hadn't really thought that we will reclaim that 21,900 mark, but that's exactly what happened. In the first half itself, we staged a very smart rebound from the day's low, and we reclaimed that 21,900 mark by the end of the day. If you look at the broader end of the markets, outperformance coming in there as well, Yatin. The Midcap index, the Nifty Midcap 100 index hit a fresh high today as well. And if you look at the NSE advanced decline ratio, that was almost in the ratio of 2:1.
Correct.
So every 2 gainer for every 1 share declining, right? Big gains for IT today, 2.5% kind of gains on the index. Nifty Energy index also, up in excess of 2% thanks to, the unabated rally in the likes of BPCL, HPCL, IOC. These are all buoyant in trade, and if you look at some of the other movers, autos, metals, all of them were participating in today's up move. But what was not participating was of course the entire banking pack, both private as well as PSU banks. Both these indices, Nifty Bank and Nifty PSU Bank, were sulking in trade, and so was the FMCG pack ahead of Britannia's numbers. In terms of individual movers on the Nifty, BPCL, as I mentioned, HDFC Life and HCL Tech, TCS, Maruti, these are some of the some of the other names, Wipro as well. So TCS, let's talk about that. It hit that 15 lakh crore rupee market cap, and it hit a fresh high today after 2 years. I think it's the second most valuable company now after Reliance Industries, which, by the way, is heading towards that 20 lakh crore rupee market milestone as well. Aside of that, if you look at some of the losers, Power Grid, I think numbers are coming out tomorrow. So ahead of that, this stock was under pressure. Britannia ahead of numbers, under pressure. IndusInd Bank, Kotak Bank, ITC. So consumption and banks as a pocket didn't do well. But aside of that, Yatin, today HDFC Bank Group has got the RBI approval to buy stakes in various banks, 6 banks if I'm not mistaken, up to 9.5%. So you'll be talking about banks in just a bit. So we'll discuss that. But let's talk about the broader end of the markets. Paytm has snapped its string of losses.
Yeah, so Paytm, yes, on huge volumes, the stock saw an intraday recovery of 10%. It was locked in 10% lower circuit and managed to recover during the day. But that apart, today's star performing mid-cap in the Nifty 500 was Yes Bank. On huge volumes, the stock went up 12%. Obviously, the HDFC group, including HDFC Life and HDFC AMC, would be looking to hike their stake in, Yes Bank as well as IndusInd Bank, and the RBI has permitted a composite stake of nearly 9.9% for the group. Probably on the sentiment, the stock moved. Also, SAIL, IOB are the PSU stocks which moved in trade. The IOB up 8% and SAIL also gaining by nearly 8%. One of the top gainings PSU stocks. Now, on the losing side, we had Prince Pipes declining by nearly 7%, Suvin, Pharma also declining by 6% on the back of weak Q3 numbers versus expectations. And also look at Policy Bazaar. That stock ended lower by nearly 5% after Moneycontrol news report suggested that the income tax department might seek additional information from Policy Bazaar and its unit Paisa Bazaar for certain lapses. Obviously, the stock went down as much as 10%, but managed to recover after the management clarification, which indicated that there is no such probe as such going on, but they will cooperate with the income tax department as and when they ask for data points.
All right, of course, BB Fintech there, under pressure today. But, Yatin, before we move on to the stocks that are on our radar this afternoon, Nykaa has reported numbers and looks like a good set because, profits have nearly doubled, 97% uptick. Even margins have expanded. I think margins have come in at somewhere around, I think I can't see the figure right now, but revenues have grown in excess of 22%. EBITDA has grown in excess of 26%. So, Nykaa, will be reacting to its numbers. On the face of it, it looks like good numbers. I think margins were somewhere around 5% or thereabouts. We will of course be getting the details once they trickle in. But of course, on that note, let's take a look at some of the other stocks that are on our radar this afternoon. Airtel ringing in gains. Of course, at one point in time it was up 4% or so, but towards the end of the day it ended higher by about 2% or thereabouts. Good set of numbers. Profits was slightly below expectations, but ARPU, average revenue per user, has improved to over 200 rupees. So 208 rupees is where it's at. flat vis-a-vis 193 rupees on a YOY basis. Mobile services in India experienced a 12% kind of revenue surge, and the customer additions both for 4G and 5G were quite robust. In fact, UBS has maintained that in absence of any tariff hike or pricing action during the quarter, the ARPU growth was likely driven by secular forces alone, including the likes of transfer from 2G to 4G, prepaid to postpaid customers. So this migration seems to have aided the ARPU growth for Airtel. Morgan Stanley has an equal weight rating on the stock, target price of 1015, which shows that even though brokerages are positive, but they see the upside to be limited from here. They expect the upside to be limited because all the target prices are very close to the current price of the stock. In fact, Morgan Stanley has maintained that the key highlight, of course, was the beat in India mobile business revenue and EBITDA. That was, of course, led by improving subscriber mix, and the cash flow generation has also been robust. In fact, capex was stable on a quarter-on-quarter basis, and that kind of surprised positively, according to Morgan Stanley. And Goldman Sachs is also maintaining that much of the free cash flow generated during the quarter, in fact, during the first 9 months of the year, has gone towards prepayment of spectrum dues, and which is, of course, and because of that, a further decline in capex could be expected. But the company has said that the return on capital employed remains low, and some bit of tariff action is necessary for that to improve, and of course to also improve the health of the industry. Aside of that, even Bernstein has a outperform rating, target price at 1140, which is why I said that brokerages are saying that they are positive, but upside seems to be limited from here. Looks like the industry is waiting for some bit of action on the tariff front, and that is much needed for numbers to really improve. So that's about Airtel. Yatin, what is on your radar this afternoon?
So I would like to talk specifically on banks, Nandita, because what I learned and what I understood from the recent NSE filings, that the weightage of banking stocks in the Nifty has fallen to a 5-year low. Now, why has this happened? Let's understand. Currently, the weightage of banking and financial stocks in the Nifty is nearly 33%, and it is down by nearly 550 basis points, or 5.5% from April 2023. Now, why is there a sharp, fall in the overall weightage of financial sector, which is at the lowest since 2019? Is the fact that private sector banks have underperformed. In fact, if you look at year to date, except for ICICI Bank, all of the private banks in the bank Nifty have given negative returns. Obviously, if you look at HDFC Bank, it's the main culprit because the stock is down 15.5% year to date. We also have Kotak Bank, Axis Bank and IndusInd Bank declining by anywhere between 4 to 5% on a year to date basis, because of which we have seen a substantial decline in the weightage of banks in the Nifty basket, and it continues to be a drag overall because banks in general are underperforming the other Nifty stocks, because of which there is a big weightage adjustment which is happening. And as I mentioned, Nandita, earlier, since 2019, we had the lowest level of weightage for banking stocks.
That's true, Yatin, but a lot of experts are saying that given the underperformance in banks, once FIIs make a comeback, that will be this sector will be a hunting ground for foreign investors, given the fact that valuations have become attractive after the kind of underperformance that we have seen. So of course banks will be hogging the limelight going forward. But the other stock on my list today is Britannia. Ahead of numbers, it was among the top Nifty losers. It is likely to see muted earnings growth in line with its peers, given the fact that volumes have remained weak for the entire FMCG pack. Even rural demand continues to struggle, right? And that, given the fact that it forms somewhere around 50% of revenues for some of these FMCG giants, rural demand recovery is crucial for FMCG companies, right? But higher competition from regional brands, is likely to hurt volumes, given the fact that inflation has come off, right? And which has also seen the resurgence of regional players, because of which the volumes for FMCG firms have taken a hit, and it will be no different for Britannia as well. If you look at the CNBC TV18 poll for Q3, the revenues are likely to go up by 2.5%. Margins seen flat but declining by somewhere around 50 basis points at 19%. Profit, PAT is also expected to decline by 41% or thereabouts. That's according to the CNBC TV18 poll. As I mentioned, domestic volume growth likely to remain subdued. Somewhere around 2 to 3% is the kind of volume growth that the industry expects. In fact, analysts expect, and higher ad spends are likely to to weigh in on the margins as well. But it's the premium segment that is expected to fare better than the mass segment. Of course, the trend of premiumization plays out here as well. And new launches and expansion in distribution network is something that could support growth for Britannia. But what the street will be really watching out for will be the commentary on rural demand, how the its outlook for the core biscuit portfolio, as well as trends in market share for various categories. Correct. So that's something that the street will be watching out for. But I also want to mention that FMCG stocks have also not done well in this leg of the rally. And if you look at Britannia, the stock is down 5% on a YTD basis. Yatin, all the FMCG stocks have
in general, I think if you see HUR also post the result, the stock was down, and in general there is a disappointment with respect to the volume growth, especially to do with the fact that the rural consumption has really slowed down for all of this, as a sector. Yeah, and Yatin, I think it will continue to be a pain point given the fact that we haven't really seen any kind of handout in the budget, and Manrega allocation has also been pretty flat, and there's been no tinkering with direct taxes, so not much money in the hands of not much money in the hands of consumers to really go out and spend. So those were the stocks that were on our radar this afternoon. Of course, we'll be back at 8:30 a.m. with the market and with the setup, and of course all your stock related queries will also be taken up by our technical expert on the show. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. You guys stay tuned to Moneycontrol for all your other news and updates.